Hi folks, welcome to this question on fair value through OCI investments. In this question, it's a little bit different than some of the ones we've done because it's going to have you calculate changes in OCI over a 2-year period, but we're also doing this question under IFRS rules effective 2015, and if in essence we're doing it without recycling. So what that means in our case is that any sales of fair value through OCI investments, those cumulative unrealized holding gains or losses are not going to be adjusted through net income. They're going to be adjusted through retained earnings. So now in this case, at the end of 2014, the question asks us to adjust the fair value through OCI investment account to its fair value. Well, the fair value is 366.1. They're sitting on our books right now at 369.7, which is higher. So we have to bring down or credit the investment account for 3,600. So because it's a fair value through OCI investment, we are going to debit the unrealized gain or loss account, which runs through OCI, for 3,600. In Part B, what they ask us to do is they ask us to prepare the accounts that would appear in the Statement of Financial Position at the end of 2014. So at December 31st, as part of the non-current assets section, we would show long-term investments, and we would show them as investments in equity securities, fair value through OCI, or just fair value through OCI investments. But again, they're long-term and they're non-current, and they would be showing at the fair value to which we adjusted them through this entry. So when we made this entry and posted it, we now set them at 366.1. So in our balance sheet or statement of financial position, they have to show there. Now, what would we show in AOCI, or accumulated other comprehensive income? Well, we would be showing negative or a debit balance in that account of 3,600. Why? Because we didn't have a balance in the AOCI account to begin the year, right? But during the year, in OCI, we included an unrealized loss. That's what we booked in here for 2014. So that's a debit to the account. Well, AOCI is like any other shareholder's equity account. You would increase it with a credit or decrease it with a debit. So we decreased it or debited it, so I'm putting brackets of 3,600. So now the AOCI account has a debit balance of 3,600 at the end of 2014. In Part C, what the question asks us to do is they ask us to show what amounts would be reported on the Statement of Comprehensive Income. So what I've done is we know that comprehensive income is equal to net income plus OCI. Well, I've just made an assumption here just so that we can show you a partial statement of comprehensive income. I just like to put numbers in. So I've assumed that net income would be 100,000. Now, what would OCI be? Well, OCI would be 3,600. Why? Because don't forget, in 2014, we booked to OCI a debit to the unrealized gain and loss account through OCI. That's what we did up here. Right? In 2014, we booked that debit, so that's going to affect our OCI balance in 2014. If we had sold any investments this year, we would have deducted what we reclassified or recycled to retained earnings. But I got a 0 in here only because we didn't sell any investments this year, any OCI investments. But the reason I put it in this year is because in 2015, we are going to be selling some. So I just wanted to show you kind of a flow through. So in this case, because we didn't reclassify anything to retained earnings, because we didn't sell any fair value through OCI investments, we'd be deducting nothing. So therefore, we would have 3,600 here, right? So we would deduct nothing here. So we would actually have, I guess, an unrealized loss. I could just put it in like that with a bracket, right? Because we've got an unrealized loss here, less 0. So I've got negative 3,600, or a net unrealized loss, to which I'm going to add this loss to $100,000. So I'm going to get comprehensive income of $96,400. So that's like your $100,000, okay, plus a negative 3,600, because it's a negative 3,600 because it's an unrealized loss, and that's going to give you, I just line this up a bit better, 96,400. So now if we went to Part D, Part D said, now in the next year, 2015, in January, what did we do? We sold a fair value through OCI investment. We sold the on shares, and it told us in this question that we sold them for, what did it say here? We sold them for $153,300. So now, if we look, I'm just going to make sure we look at one step at a time here. Now, the first thing I need to do is I need to adjust that security, the on shares, to their fair value at the date of sale. Well, if you look at your question, at the end of 2014, when we made the $3,600 adjustment, we adjusted these shares to their fair value. So they were sitting, when we adjusted them to their fair value, at $150,000. But we've now sold them for $153,300. So that means that on the date we sold them, they were worth $153,300. They were sitting on our books at the end of 2014 after our $3,600 adjustment at $150,000. So we've got to bring them up by $3,300, which is this little guy here. This $3,300 amount, right here. So we've got to adjust it from $150,000 to $153,300 to bring it to its fair value at the date of sale. So we've got to adjust them by $3,300. So we're going to debit the fair value through OCI investment and credit the unrealized gain or loss going through OCI, which in this case would be a gain, right? Because it's going up, right, to $153,300 at the sale date, and that's going to be $3,300. Now the next thing we have to do is we need to dump this dump this investment. So now that we've adjusted it to $153,300, what we're going to do is we're going to realize the cash of $153,300 from the investment. So once we adjust it to its fair value at the date of sale, we're now going to get rid of it at the amount that we got, which is $153,300. So we're going to debit cash and credit the fair value through OCI investment at $153,300. So now the investment is gone. We no longer have it on our books. Now what we need to do, the last thing we need to do, is we need to recycle any cumulative gains and losses on those on shares through retained earnings. And again, it's through retained earnings because we're doing this without recycling. So any unrealized gain or loss that we had on that investment now has to be booked through to retained earnings. Well, don't forget, we said here that we had an unrealized gain. So we had a credit, right, on that amount. So what do we need to do? We had a credit of $3,300, but don't forget that's our credit that we booked here when we adjusted the security to its fair value at the date of sale. But don't forget, you also had in the previous year, 2014, if you look at the question, an unrealized loss on that investment at the end of 2014. So if you check your textbook, you're going to see that the carrying amount of the investment at the end of 2014, before you made your fair value adjustment, was $175,200. The fair value of that investment that you adjusted it to by making that $3,600 fair value adjustment was $150,000. So you actually had an unrealized loss there on the investment of $25,200. So maybe I can do a line in here and tell you that that negative $25,200 was as a result of what we did in 2014. You had $175,200 carrying value, right? But the fair value you adjusted it to was $150,000. So maybe that might help a little bit. Particularly if you don't have your text with you, that might help. Okay, so what you've got happening here is we get this amount here that I've got here is basically what I'm calculating. It's equal to the carrying value at the end of December 2014, The difference between that carrying value and the fair value at the end of December 2014, right? So that was the holding loss on the on shares at the beginning of 2015. You adjusted it on January the 20th, this amount here, this 21.9, was the holding loss on those on shares at the end of 2014, which was the beginning of 2015. Now, on January 20th, 2015, you made a further adjustment to adjust those on shares from 150 to 153.3 at the date of sale to fully realize or book any holding gain or unrealized gain from January 1st to January 20th. And that's the 3,300. So now cumulatively, you have an unrealized holding loss of 25.2 for 2014 and 3,300 unrealized gain for 2015 for that 20 days that you held it. So cumulatively, you've got a holding loss or an unrealized loss of 21,900. So that net unrealized loss, which is a debit, we have to credit the account to zero it out, and we're going to debit or reduce retained earnings. So again, that's how I figure it out. That's how I do it. However, what you could do, and we learned this in our previous lecture, what you could do is you could say, well, any cumulative gain or loss on any investment is really the cumulative unrealized holding gain or loss that I have in that investment since I bought it. So you could look at your cost and deduct your fair value at the date of sale, and that will also give you 21.9. Because don't forget, this is the cumulative gain or loss. So all you're doing is following through all the gains or losses, all the holding or unrealized gains or losses from the day you bought it, which was the cost, which was also the carrying value at the end of 2014, which was 175.2, and the fair value at the date that you sold it, which was 153.3. So that will also give you your 21.9 AOC cumulative other comprehensive income loss, right? Or your cumulative unrealized holding gain or loss. And in this case, it's a loss because it's gone from its cost to its fair value, which is lower than cost. The other way you could do it, very simply, run a T account. You know this was your unrealized loss at the end of 2014. That was in the question. You know that on January 20th, you booked an unrealized holding gain, or which was a credit to the gain or loss account of 3,300. So now you have this loss sitting there at the end of it, 21.9. Step 3 says, no, we want to transfer this loss to retained earnings because we're doing it without recycling to net income. So to transfer it out to retained earnings, we got to get it out of the unrealized gain or loss account. So we're going to credit it to set it to zero. And what do? Once we credit this, that's our entry here. We're crediting it. And what do? We debit retained earnings because it is without recycling. Okay, so that will also do it. Now, the question also said to book everything that happened in 2015. They just happened to throw something else in here and tell you that there was a dividend paid during the year. There was a dividend paid during the year on the Burnham shares, and that was a $1,300 dividend. They just threw that in to give you something a little bit different than OCI. So all we did there is debit cash and credit dividend revenue because the company took that in. Now, in Part E, what they ask you to do is they ask you to prepare the journal entry to adjust the investments at the end of 2015 to their fair value. So what do we want to do? We want to now look at all the shares we have at the end of 2015. Well, I have Burnham shares and Chai shares. I don't have any of the on shares left because don't forget at the end of 2014 I sold them. So what am I carrying those shares at that I have left, the Burnham and the Chai shares, at the end of the year before the adjustment? Well, the question told you. The question said you're carrying them at the end of 2015 at $140,600, right? Or sorry, I should say the carrying amount at the end of The carrying amount for these investments at the end of 2015, because there's been no activity in them in this row, right, or in this column here, there's been no activity in those shares in 2015. So these values I'm getting right from the top part of the question. So in other words, I look at this and I say, well, the carrying amount of the investments at the end of 2015 is the same as what they were at the end of 2014. How do I know that? Well, because there's been no activity in the shares. I didn't buy any more or sell any more. So because I didn't, those are the same values at the end that I had at the end of 2014. That's the carrying amount on my books at the end of 2015. However, the fair values are not the same. The question tells you that the fair value of the Burnham shares are $153,750 and the fair value of the Chai shares at the end of 2015 are $72,600. So I compare the carrying value, which was the same at the end of 2014 as it is at the end of 2015, $216,100. I compare it to the fair value at the end of 2015, and I'm going to get a net holding or unrealized gain of $10,250. So the investment portfolio's gone up from $216,100 to $226,350. So I debit the fair value through OCI Investments and credit the unrealized gain or loss that runs through OCI of $10,250. So this concludes what the question has asked you to do to prepare the journal entry to adjust the investment portfolio to its fair value at the end of 2015. In the next video, what I'm going to do is I'm going to start you off and I'm going to add a new part F, and we're going to do the statements for 2015.